Hello viewers, today on vishalvealthview we have a significant development with Reliance entering the defense sector. Reliance has officially signed a $1.2 billion agreement with Germany's DS Defense to produce precision-guided ammunitions in India. With this strategic move, all four major Indian private players, Reliance, Tata Advanced, Adani Defense and L&T Defense, are now firmly hunting for opportunities in defense sector. This is coming under the backdrop when the defense sector has already faced a bull run in last 4 weeks, with the valuations of company touching sky high. Companies like Dixon, Data Patterns, Paras Defense are already at a premium valuations. However, scenes on the other side of the planet are truly unwatchable right now. Once the beacon of democracy and capitalism is witnessing chaos, riots, and anarchy on its street. The markets have not reacted to it yet, with Nasdaq 100 and S&P 500 holding stable. However, the clash between Governor Gavin Newsom and President Trump is escalating, and Trump is planning to send almost 2,000 National Guard. This will fade away investors' confidence even further in the biggest growth engine of America, which is California. With looting, burning, and rioting becoming a norm, the protests are now spreading across different parts of US and the escalation of a civil war is increasing. First, let's start with understanding what's happening in US and how it will affect all of us. The recent riot and protest in US, specifically LA, have unfolded as a significant national crisis following aggressive immigration raids by ICE that began on June 6, 2025. These raids led to a detention of over 100 individuals in broad daylight, sparking widespread outrage and demonstration that rapidly escalated into a violent clashes between protesters and law enforcement. The unrest has spread beyond LA to cities including New York, Chicago, Atlanta, and Austin, with protesters voicing strong oppositions to immigration enforcement policies and the presence of federal agents. The Trump administration responded by deploying over 4,100 National Guard troops and Marines to LA to restore order. A move that drew criticism from local officials and led to a legal challenge from California claiming the deployment was unlawful. The protests have involved confrontation with police using tear gas, rubber bullets, and flashbang grenades, resulting in numerous arrests and injuries on both sides. Despite the turmoil, the administration has vowed to continue the immigration enforcement operations because that's what Trump got elected on, framing the protest as a threat to national sovereignty and national security. But from investors' confidence perspective, all of these things that are happening in California matters. The riots and the broader political instability have contributed to cautious market environment. While the institutional investor sentiment has shown a sign of recovery by end of May 2025, rebounding from earlier concerns over trade tariff and inflation, the eruption of civil unrest has injected fresh uncertainty. Investors are closely watching how the administration manages the situation, as prolonged unrest or a spread of protests to other major cities could further undermine confidence in US market. Now, some investors have already begun reassessing their exposure to US assets, with a noted shift towards European and Japanese markets amid escalating policy uncertainty and geopolitical tensions. Market futures for major indices like Dow, S&P 500 and Nasdaq have remained flat as investors await key inflation data and outcomes of ongoing US-China trade talks, both of which are critical to setting the near-term market direction. Considering the market is already overvalued, that is also adding a fuel to the entire jitteriness of the investors and decreasing investor confidence in putting in new money. Along with that, analysts are also warning that a combination of domestic unrest, fiscal policy concerns, and global trade uncertainties is keeping the investment climate tense and volatile. However, some experts believe that unless the protests persist for weeks or intensify nationwide, the immediate impact on the markets may be limited. In a nutshell, the 2025 US riots linked to immigration enforcement have created a volatile and uncertain environment, at least for foreign investors, that challenges the public order and investors' confidence. The federal government aggressive response has intensified the situation while investors remain wary, balancing the risk and domestic instability. Along with that, there are multiple stories coming out from US immigration where visitors, students are being detained and are treated like shit. With one of the recent videos was uploaded by one of the students from Haryana who was visiting US and he was detained by authorities and the entire scenes were chilling. I advise viewer discretion. Now this was chilling, obviously, but there are multiple videos on internet that resembles the same story and shows a pattern where both legal and illegal immigrants are treated like shit. If you see recent stories from visitors who are visiting to US from Canada or UK, they have also told the same experience. Because of this, the total tourism count to US have been declining over past 6 months after Trump got elected. Clearly, the policy of America and American administration have to change if they want this investor confidence to come back and visitor confidence to come back. But from the looks of it, how Trump administrating is moving ahead, I don't think that's going to happen anytime soon. Now, if we put all these pieces together, the trade war, the demographics issue, high inflation, higher interest rate, consumer facing challenge in spending, I don't think the story for America looks really great in next 3 to 5 years in terms of investing. AI sector is the only sector that's a growth sector in America right now, with primary growth being driven by the infrastructure that we are setting up for AI and some amount of AI services company. But they are also facing an existential threat and challenge from US-China trade war. And all the tariffs are going to impact these companies as well. So from a near term to medium term horizon, I don't think it's a good time to put in fresh capital in America. Again, this is not an investment advice since I'm not a financial advisor, but this is how I look at the world and this is what I'm concluding based on my observations right now. Now let's talk about the big power player move that's coming from India by Reliance and Ambani's in defense sector. In a move that could reshape India's defense production landscape, Reliance Defense, a subsidiary of Reliance Infrastructure, has entered into a strategic cooperation agreement with Germany's Dial Defense. The partnership will focus on local production of Volcano 155 precision guided munition system, an advanced artillery shell designed for long range, high accuracy strikes. The announcement made on 10 June signals a major step forward in India's effort to reduce dependence on imported defense equipment and build a robust domestic manufacturing base. Volcano Systems is a 155 shell. It uses cutting edge laser and GPS guided targeting to deliver a shell to a pinpoint accuracy. This makes it valuable asset for Indian armed forces, especially in modern combat scenario where precision is critical. Reliance Defense will lead the manufacturing effort as a primary contractor with Deal Defense providing the core technology and system level expertise. The production will take place at a new greenfield facility in Vatad Industrial Area, Ratnagadi, Maharashtra, which will be a part of Dhirubani Ambani Defense City. This is a 10,000 crore opportunity. Reliance Defense estimates that this partnership could generate up to 10,000 crore in revenue. This projection reflects the growing demand for advanced ammunition systems and companies' ability to localize critical defense technology. The manufacturing initiative will include over 50% indigenous value addition, directly supporting India's defense indigenization goals. It also aligns with government's target of achieving 50,000 crore in defense export by 2029. Deal's defense headquartered in Oberlingen, Germany, is a global leader in defense system. Its portfolio includes guided missiles, air defense system, and advanced ammunitions. The company employs around 4,500 people and generates annual sale exceeding $2 billion. Helmut Rock, CEO of Dale Defense, said Dale Defense looks forward to strengthen the current relationship with Reliance Group in context of TGM for Indian Armed Forces. This collaboration marks Reliance Group's fourth major international defense partnership following earlier ventures with Dassault, Thales, and Rheinmetall. The market has responded positively to this. Following the announcement, shares of Reliance Infrastructure rose by 3.5%, closing to 404.40 on BSE. The market's response reflects investors' confidence in long-term value of this strategic move. While this Indo-German partnership is being celebrated in New Delhi, reports have surfaced that Deal Defense is also quietly promoting its Iris-T air defense to Pakistan. The Iris-T, known for its performance in Ukraine, is capable of intercepting supersonic missiles like Russia's P-800 Onyx, technologically similar to India's BrahMos. Analysts believe Pakistan's interest in Iris-T systems from its desire to counter India's BrahMos missile capability. This development has raised concerns in strategic circles about Germany's dual track defense diplomacy in South Asia. Now, this can also come as a tactical play from New Delhi's side to curb the export of these IRIS-T defense system to Pakistan. Maybe by acquiring this partnership and giving some chips to play with Germany, they are now putting them in leverage to make sure like they're not delivering the systems in future to Pakistan. Again, it's a bit risky, but not sure how it will play out. However, thing to note here is that why are so many players moving in defense sector right now? In recent times, India's defense sector has staged a dramatic resurgence, with Nifty India Defense Index climbing nearly 50% since February 2025, reaching a record market capitalization of 11.2 lakh crore, up from 6.95 lakh crore. Defense stocks soared nearly 22% just in the month of May alone, buoyed by robust domestic order inflows, rising export ambitions, and favorable macro condition. And again, the performance of them in India-Pakistan conflict. With that being said, a lot of analysts are also sounding alarm because the valuation of these companies are really stretched. With companies like DataPad and Paras Defense are already trading at a valuation above 80. Future growth from this stock price would be really hard to come by because any negative news can impact the price of the stock in a negative way by a large margin because the valuations are really stretched right now. And that's it what I have for you in this episode. Do leave the like if you enjoyed this video and subscribe to Vishal Wealth View. Bye bye. Happy investing.